What's up, everybody? Good morning. Good morning. It's 11:38 a.m. Good morning. Good morning. Gonna be a pretty short stream here, but just wanted to come online. It's been a while since I've done a stream. Haven't really made any videos lately, and just wanted to kind of come back on here because I have some free time. So yeah, I'm just at in my kitchen table right now, and just want to go through some stocks, talk about my routine. That's a important thing I wanted to discuss for sure. So just excuse me a little bit. I'm just going to do some work on the back end before I start. Okay, guys, so what the hell? Okay, so what I was just doing is working on my trading routine. So I was just doing off camera. Jeez. So my trading routine, this is what I'm gonna do each each day when I have the chance to. So early morning, I'm gonna start every day with exercise. That's like more of a personal thing, nothing to do with trading, but something a lot of traders say they did in Market Wizards. So I'm just gonna mention it too, but entirely optional. I mean, it doesn't really impact the trading routine at all. So this is where the routine actually starts. Um, so it starts in the morning at 9:30 in the open. I'll open up my account and I'll see where everything opens up, and potentially if it gaps up and opens up a lot, I can slide up my stop loss to be a percent or two behind if it's a point where I want to take profit. But probably in that morning, if it's not gapping up, if it's gaps in the middle of the prior day or something like that, then I'll probably just leave it. Um, Okay, and then after we slide up the stop losses, and there may not even be a need to slide up the stop losses. So if there's not, this could be a pretty quick step. But say we don't gap up. Okay, so then we skip that step, go to step 3, which is the lunch break step. This is the most important step. This is where we're actively looking at our scanner, which is what I'm gonna do a little bit today. Show you kind of how I go through that process. So that's the most important step. That's where we enter new positions. We want to make sure our capital is deployed in the very best positions. That's what we are. That's another way to describe yourself as a trader. It's a deployer of capital. You put your money where it can have its best chance of return. That's the only place you should have your money, is in the place where it has the best chance of return. You shouldn't waste time if it's not in a place. Like, you shouldn't waste your time if it's anywhere else. Like, if it's anywhere else where you're not getting the best return as a trader, you're not doing your job right. As an investor, that could be different because you're looking for the long term. You're looking to invest in companies that will be around in 10 years and make a really big impact. Warren Buffett style, Coca-Cola, Apple, that type of thing. Whereas as a trader, we're not looking for long term, for the market to act as a weighing scale. As a trader, we're in the short term, when it's a voting machine, where it's quick, fast paced. So my routine is at lunch, hop on the scanner, look through the stocks. If I have a really good position that I'm in and I'm happy, then I'll let it keep riding. But really, the Adam Grimes approach, the Linda Raschke approach, even the Kullamagi approach, they all take profits. The Mark Minervini approach, these guys all take profits for the majority of their positions pretty early on into their positions, be it 1 day, 2 day, 3 day, 4 day, 5 days. All the names I just listed are going to take off 50 to 75 to 100% of their position. I think Adam and Linda take more like 100%, whereas Mark and Christian take closer to 50 to 75. But the what they all have in common is they're taking off the majority of their position early on into the position. So I'm looking for a stock to be. I'm looking for momentum. I have a scanner here. It's called Today's Hot Stocks. I've got two scanners, like a broad looking scanner. Hold on. Sorry guys, got a little distracted. My wife texted me and I had to respond. Okay, so where was I? Oh yeah, I was reading my list. So I was talking about deploying capital. We need capital to be deployed at the best place. Um, the traders I look up to and who I seek to emulate are taking majority profit rather quickly. So we're cycling in and out of positions. So I might often hold stocks only 1 or 2, 3 days. Now there are times like when the market is setting up to run like it just did between you know start of April through end of May. There are times when it's setting up like this, after it's been in a downtrend, a correction, then you get several bullish days in a row, and it reclaims the EMAs and yada yada yada. That can be a good time. Um, and EMAs, guys, EMAs, very controversial. Some people say they're dumb, don't need them at all. But guys like Mark Minervini, guys like Christian Kullamagi, $100 million account pluses like the EMAs, use the EMAs. Linda Rashke likes them. You know, if you have them on, I think they provide some use. I personally think that. So that's what's up. Christian Kullamagi talks about this part here. So there's easy money markets when you only want to trade when the stock market, only want to be looking for trades when the not the 10 EMA is above the 20 SMA, or let me find it exactly. Okay, at least the 10 or the 20 is sloping up and the 10 is above the 20. So right now both are sloping down and the 10 is below the 20. So right here, the 20 is still sloping up. So I would still consider this an easy money market, but except yeah, so I would still consider this an easy money market. Now the 20 is flattening and the 10 is below the EMA. So this is no longer an easy money market. But Kullamagi did say there were exceptions. Like if the 10 is below the 20 for just a little bit, it is okay. So this would still be an easy money market. Like still easy money market. The 10 is now sloping back up. 10 is still sloping up, but now it's starting to slope down, and the 20 is starting to really even out. Okay, so now both are sloping down. As of like right here, both are sloping down. The 10 is still just under the 20, so I wouldn't say the easy money market is over. But now look at it, we're at the 50 EMA. It's really starting to get to a point where if we go down again, I'm gonna stop looking for stocks altogether, and I'm just not gonna trade anymore until we get back to an easy money market again, where the 10 and the 20 are both sloping up, and at least either the 10 or the 20 is sloping up, and the 10 is above the 20. But it makes sense, guys, that we would need to consolidate because the market just ran up like crazy recently. But you know, we've been in an easy money market, so of course that has to come to an end. You know, it's just the cycle of things, and it's actually, you know, exciting because it's going to lead once it consolidates a bit, and you know, I don't know what's going to happen, but after this period of a downturn, it will eventually start going up again, and that's exciting. So I'm gonna look at the charts, guys, just real quick, see what looks good to me. Oh, my actual um, signal is the market breaking out of the prior week high, which is this lime green bar. But I also want to see, I want to see the weekly. I want to see it kind of a weekly flag, and I want to also see some like tight consolidation and before we break out. So this is just too choppy, and this isn't that good of consolidation on the weekly. Oh, excuse me. You know, this is like better consolidation, but it's still pretty, you know, up and down. So I don't like that a lot. Also, the long-term 200 SMA is sloping down, and we just were in a market where, you know, the market was just ripping. So if you're stocked at that like this bad in a bad market, it's not good. And these are all these are home building stocks. Oh, oops. Contour brands. It just seems kind of choppy. Don't like it. Um, you know, looks kind of good. Like here, this is like a nice little flag. You know, most of these are staying above the 9 EMA. But it seems like it has kind of, this is a riskier play. It's a lot choppier. So I don't like that. Penn, I think Penn would have been a good stock back here. Around the end of May. Like right here. Right here on this day. It's above the prior week high. Put your stop loss down here. The EMAs have kind of, the 10 is sloping up like it's about to pass. And yeah, we get a nice break up. And look at that. It goes from 1, 2. So the day we enter, then 1 day, 2 day, 3 day. Boom, it pops and goes from 17 up to 19. So that would have been a nice gainer. Then it has to consolidate, but once it gets back down to the 9 EMA, makes a hammer up bar, boom, it pops another couple days. So 19 up to 21. So, guys, that is something you can do. Like, if you get a stock that breaks out and is in play, after you take profit, you can look to get back in once it has a consolidation day around the 10 EMA. And, you know, have it pop and ride it another couple days. Which looks like it may be setting up to pop again here. And you know, 1 leg, 2 leg. I wouldn't be surprised if this thing goes up to like 20, pops up to like 23. Okay, let's keep looking at the stocks. This is some better consolidation. But granted, 200 still hasn't been doing that well. Saber. hotels, resorts. So I'd probably skip this. I just don't think this is a very quality stock. Even though I do like the chart a bit more, the way this 9 and 20 are looking, I do like that one a bit more. But Universal Tech, I don't know what kind of company this is. Education services. This one I like a lot more. I mean, this stock is looking a lot healthier the longer term. All the EMAs are sloping up. I think this thing could really run up a lot, and we get this nice consolidation here these last several days. So this probably would have been a stock I would have loved to buy, and potentially this stock could have gapped up after hours or something like that. And these are the types of plays that I really do like a lot more. So I think this UTI one would have been good. So I'll add this to my in play watch list. But guys, I kind of do want to wrap up the stream soon. I wanted it to be quick. This one looks interesting, though a lot of people have strong opinions about not trading biotech. Also, these EMAs, it's kind of gone up quite a bit. So I kind of expect this to consolidate more. The fact that the 10 and the 50 are right next to each other, but the 20 is below. I feel like it might, this is like, when it breaks out like this, when the EMAs come down and then it breaks up, it likes to retest. So I could see this one consolidating a bit more. That's just what I personally think. Immunity Bio, I mean, this one, really nice a long consolidation. This thing looks pretty good. I mean, granted, probably has pretty low volume. What's its average? Average 13 million volume, so that's actually decent. Yeah, I could definitely see myself trading this one. I like this chart a lot, but I kind of missed the chance to get in. This is the day I would have wanted to get in, or one of these days here. One of these days where it's actually breaking up and holding above. Because look, it runs from 760 up to 7. So that's this could have been a point where you want to take profit, really, but get in there. And then get out there. Because that's already a pretty nice profit, 15% or abouts. But looking at the weekly, you could see it popping up to 11 or something even. So you never know. This thing popped from 2 up to 10, 12 even. So this thing could pop, maybe if you apply that logic, it could pop from 7 up to 40. You never know with these biotech stocks. But they're a lot more gambly. I mean, they can gap down 50%. So biotechs are pretty risky, and I'd recommend avoiding biotechs. This one's just run up too much. Would need to see it consolidate. Too far away from the weekly. Doesn't really look like a weekly flag. This one looks a bit better, but still run up too much. Kind of want to see this consolidate a bit more, I would say. But this one isn't terrible. I mean, I could see this. This could be a good one to enter on. ALMS. What sector is this? Pharmaceuticals. So, yeah, I like this one more. Cody. Compass Diversified. I don't know what sector that is. This one looks better, but would need to see this consolidate more. The 9 and the 10 are still down, and it's been staying underneath them. So I want to see this kind of set up better. Though on the weekly, it does look pretty solid. Datadog. Yeah. Anyway, guys, I'm going to end it here. I got some stuff to do, so I'll see you later. Thanks for watching.